What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 8th of 2020. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, we've got a lot of key things to discuss, as we're not only going to be talking about one of the key signs that might prove here that over the next few weeks, we could get a boost in altcoins, starting the initial stages of the overall cycle that'll come probably later in the fall and winter. And outside of that as well, I want to talk a little bit about the current status of the market, dive into a little bit of the developments in DeFi, as well as the broader cryptocurrency space as a whole. So I've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. If you're on the hunt for a proven, trustworthy exchange in Europe to trade your crypto, then I recommend taking a look at Bitpanda. If you're just getting started, many people refer to Bitpanda as the European Coinbase, so it can be a great place to start in getting your first crypto positions. With over 5 years of experience serving the industry by offering easy and secure access to digital currencies, Bitpanda has really earned its reputation. Check out the link down below in the description for more information. Alrighty, everyone, so let's go ahead and take a look across the board for the market. As we can see here, over the last 24 hours, the vast majority of cryptocurrencies are in a no trend scenario, between 1 to 2% to the upside or downside. However, the ones that are keyly standing out here are not only MakerDAO as one of the big DeFi plays, but Basic Attention Token up nearly 7%, as well as Ravencoin nearly up 6%. VeChain and a few other protocols doing well as well. The key thing, though, again, in the sense of anything that really shows significance, is that over the last 24 hours, we are slightly up for Bitcoin and Ethereum quite similarly. So this is really what I want to dive into, because Ethereum and Bitcoin and the relationship between these two currencies are going to be the key driver and determination factor as to whether or not, really the determining factor as to whether or not we're stepping into some of the initial phases of the altcoin cycle. So let's go ahead and talk about that. One of the key things here to watch for in regards to the altcoin dominance chart, and again, rather than just looking at BTC dominance or BTC.D, I'm looking at 100 minus BTC.D, which is giving us the altcoin dominance measurement. All right, so as Bitcoin dominance drops, altcoin dominance increases. And as you all know, we've been watching for this very long-term wedge to have a breakout sometime here going into the summer, starting to have the initial phases where we come out of the line of resistance, come down and make it support, and then we leap off for the next cycle. That's more of the conservative estimate. It could start earlier than that. We could get it where Bitcoin still doesn't break out to its all-time highs for quite some time, and we get the altcoin cycle a little bit beforehand, right? We've already been in a general kind of long-term slight uptrend here as we've been setting higher lows and, roughly speaking, in some cases higher highs. But for the past couple of months, since back here in February, we've been setting these lower lows and lower highs, and we've been in kind of a descending channel here. So the question is, over the next few days, is whether or not the third time is a charm here and we're going to break through, or if we're going to pull back down here to the support line and then maybe retest it for a fourth time. Well, the determining thing that I'm looking for here is the second largest cryptocurrency and how it plays out against Bitcoin, ETH BTC. So I want to see whether or not Ethereum can actually outpace Bitcoin here over the next few days. And interestingly enough, we've been having higher lows here, right? And again, continuously since all the way back here since September, the significant lows are at higher levels each time. And interestingly enough, we might be at the point where we have our answer, because if you draw different different resistance lines across ETH over time compared to Bitcoin, you can draw it at differing levels. Doesn't really matter. You could use the top wicks here, or you could use, for example, the core kind of areas of price, more conservative levels. Well, interestingly enough, no matter how you really draw it, we've actually been sitting above it here for the last few days. Right? So this is very important to take into mind here. Really, no matter how you draw the line here, I know sometimes trend lines or lines for support and resistance can be a bit subjective. If anything, right now, we've not only gotten above it, we've been making its new support here as we've been seeing price hold around here for the last few days. Volume's been relatively stagnant. This is the perfect setup where over the next 48, 72 hours, you could really start to see this pick up pace and move to the upside. And again, this kind of plays into the ETH USD chart. Go ahead and make sure I get a good copy of it here. We'll go over to Coinbase. Again, Coinbase here, signaling if we want to go ahead, draw the lines here, right? Getting very, very close to a significant breakout. Again, that's taking the top wicks here. If we, again, take a lower level here, right, we get a slightly different level. You can see that either way, no matter how you draw these lines, we're just a couple, a few bucks away from really actually testing up into this range and possibly breaking higher. So again, just a few $dozen here for Ethereum would push us above here, set up a new, possibly a new higher high here compared to what we had back here in February of 2020. And that's what we want to look for here. And again, that's considering all the way back here, some of these higher levels, right? Now, the hardest one to pass in this case is if you're using the most conservative range here, where most of the highs were, then in that case, we've got a little bit more of a ways to go. But all in all, it's really not that bad. And it's not unrealistic to think that over the next few weeks, we could pass up past these levels. And again, I think the significant thing you want to look for here is the follow through to set a higher high. If we get a higher high, pull back a little bit, and set a higher support range here, generally in line with what we've had here for the past few weeks for Ethereum, as we've had a nice line of support here for price, right? If we can do that, then I think that we're very much on our way for the start to the next altcoin cycle. Of course, just going ahead here, turning off our drawings and taking a look here at the monthly, we start to get a very clear picture of what Ethereum is doing right now, right? Taking a look at the logarithmic chart, you can see that we generally have, since all the way back here, a line of support here for Ethereum from those higher lows, right? Especially the significance of the multi-month higher low comparative to the multi-month higher low over here, or the previous low in this case, so it would be a lower low. But you can generally see price is holding support at higher ranges. And we're seeing this across the board with other protocols. This is exactly what you want to see in price. Notice how we're not using any crazy indicators. We're simply looking for good price action. That's what we want to look for. And again, this also is going to follow into Bitcoin here. Taking a look at the logarithmic chart, still pressing up against resistance. Really, again, looking like it's slowly stepping above there, but we need to see a breakout like we saw back here without the dramatic sell-off afterwards. We need to see a multi-day or multi-week follow-through to test up towards $11,000 for Bitcoin. I have a feeling that when it kicks off, when we get that volume, it's not going to take that long. It's going to probably take about a week to rally up to that range. As we've seen in the past, Bitcoin, in a matter of a week, can have 2 or 3 big buy-side days where the price goes all the way from something like 7,000 all the way up to 8,854 just back here in April. So again, looking for something similar to that. Coming up here, testing this general line that's played support and resistance. Going to treat it as resistance here, come down here, making support on the historical line of resistance here that's been holding since back in December of 2017. And then we might have liftoff. We will see what happens. But that's our general take for technical analysis for now. I wanted to go ahead and talk a little bit about some developments in the crypto space. Many people have been talking about Coinbase and the inability to actually trade on Coinbase during volatile moments in the cryptocurrency industry. Now, many people have accused Coinbase in this case, and again, I'm not here to per se make that statement, but there's been lots of claims in the cryptocurrency industry from other people that this has been Coinbase trading against its own customers, that this has been, Coinbase specifically doing this, right? And I don't want to sit here and make that debate. No one knows if that could actually be the case. You would have to actually know the actual backend code, the actual functions of the exchange, neither of which we have access to, right? But I do want to say, above anything, that they are aiming to try to fix this. So you can see here, for example, this is an example of traffic at a time where Bitcoin's price picks up here. This is, again, sourced from Coinbase. So as we're reading the quote here, this traffic spike affected a number of internal services, increasing latency between services. This led to process saturation of the web servers responsible for our API, or application programmable interface, basically, again, allowing people to interact with the exchange through a variety of different services, where the number of incoming requests was greater than the number of listing processes, causing the requests to either be queued and timed out or fail immediately. Our request error rate spiked to 50%, causing customers to experience errors when interacting with Coinbase.com and our mobile apps. So again, this is something that people have been kind of accusing Coinbase for a while. This is a tweet, for example, from Crypto Whale that talked about the Coinbase circuit breaker. So referring to the fact that in traditional markets, there's a circuit breaker that'll trigger if the market goes down 6 or 7 or up 6 or 7% to reduce excessive volatility and to make sure, irrational, trading algorithms or traders themselves aren't pushing things too dramatically. Well, the idea here is that they're claiming that Coinbase has a supposed circuit breaker. Again, interestingly enough to see that when all these major moves happen, there is, again, Coinbase tends to shut down whether it's a move to the upside or downside. But again, that doesn't, negate the fact that it could simply just be, as you have larger price moves, there are more users and therefore things shut down. Again, I would like to hear from you guys in the comments. Again, I want to try to approach this as rationally as possible because it just doesn't make much sense to me. I mean, maybe it's that Coinbase really has seen a massive set of users since we've really seen the spike in new retail users when Bitcoin went down to 3,800. That's a moment of time where we had a lot of people coming into crypto when we had the really bloody sell-off on Monday. Not Monday, March. My apologies. So, again, the key thing here is that they're looking at pre-scaling and caching to reduce the impact here in the short term and hopefully avert this in the future. I would say if this continues though, guys, this is a key reason why we'd want to turn towards not only other platforms that can provide that kind of scalability and that ability to trade, but outside of that as well, look towards decentralized solutions. They're never down, they operate on-chain, and if you're looking to trade ETH or ERC20 tokens, it's a pretty key solution. I think we've got something that might be able to help you guys out with that in the future. Now, anyways, I want to go ahead here and talk about a key thing here in regards to custody and the developments of the Bitcoin network, and this is going for probably many other cryptocurrencies, is that over 6 million Bitcoin out of the overall existing supply that will ever last, which is 21 million Bitcoin, over nearly a third of those Bitcoin are currently in secured shared custody. So, what does this mean? Well, it means that these 6 million Bitcoin are living in a structure, a wallet structure, that's guarded by basically multi-signature authentication. So basically they're utilizing multi-sig wallets. This allows your Bitcoin to be stored by, or maybe the Bitcoin of many people, to be stored under a wallet that has multiple keys. And it requires maybe, for example, 3 out of 5 or 5 out of 7 keys in order to sign the transaction to move funds out of the wallet. And this is really awesome to see because basically ever since Mt. Gox, we've been seeing a large growth in the number of these multi-signature wallets, Bitcoin being stored in multi-sig. Now it's been relatively stagnant since back here in the summer, but after having a pretty stark drop, we're actually seeing an increase back into the trend. And again, I think this is going to be, whether it's through BitGo, whether it's through, Firestore, there's all these different companies out there that are actually working on building these custodial solutions in-house, different types of ways and different structures. But more than anything, a lot of them are using this key component because it is a much more secure mechanism than having one specific pair of public-private key encryption on your crypto and someone getting a hold of that and then being able to spend all your funds, right? If you're able to, for example, compromise one of those key pairs, that's great and all, but it's not going to give you access to the funds because there are multiple key pairs that would need to be accessed or broken into in order to get access to those funds. And again, this has been growing sharply. If we take a look back at the chart here, since back in 2015, ever since they implemented the soft fork after Mt. Gox to allow for multiple signatures to be tied to one specific wallet. So really interesting stuff here. Now I want to spend some time to dive into DeFi here, talking again as one of our big topics for 2020 and beyond. DeFi again, right now, continuing to see a general downtrend here for ETH as we've been seeing since back here in March when we had the dramatic sell-off, and that led a lot of liquidation events for MakerDAO. But I want to go ahead and talk a little bit about the kind of long-term philosophy here, right? Because the longer-term uptrend here for DeFi has been fascinating, going from a few thousand Ethereum back here in September of 2017 when the likes of Kyber Network and a few of the other DeFi plays were just budding up at the time. Now we've come a really long way. We have millions of Ethereum locked up in the DeFi ecosystem. And I want to talk about how many people see, in this case, Nick Chong did a really great article talking about DeFi being on track to become a liquidity black hole for Ethereum and other assets across the cryptocurrency space to be sucked in to the DeFi ecosystem. Now, I want to go ahead and talk about why this would be labeled as a liquidity black hole and why it is that DeFi is sucking in all these assets. So it's key to understand here that for the vast majority of DeFi, it's on Ethereum. And through the DeFi ecosystem on Ethereum, you're seeing a lot of great applications. You're seeing decentralized exchanges or swapping mechanisms, things like, for example, Kyber Network that allow you to swap ERC20 tokens for one another or maybe against ETH, or things like Ren, which again are building things like RenVM that allow you to basically do the equivalent of swaps in this case amongst different markets to basically be able to bring other assets in a non-custodial way onto the Ethereum blockchain to be able to make these trades. So it's very, very interesting to see swapping mechanisms coming into light across cross-chain assets. So for example, you can trade Bitcoin to Ethereum, Zcash to Ethereum, whatever it may be. And outside of that as well, seeing lending pools coming to the forefront, billions of dollars of assets being stored on pools that are paying high interest rates from anywhere such as 1 to 2% on more decentralized platforms, all the way up to 7 to 8 to 9% on some centralized lending pool protocols. So it's really fascinating to see that DeFi as a whole is really starting to butt up here. And there's a ton of different applications outside of that. That's just the general gist of what's going on at DeFi. But we can see because of those key principles, the platforms that provide utility, and along with that as well, this ability to bring in new assets, cross-protocol, protocol assets that are outside of the Ethereum ecosystem into the Ethereum ecosystem now makes DeFi a prominent target to become a liquidity black hole, to start sucking in all of the value from the cryptocurrency space as it grows. And I think that this is really interesting. There's a good quote here that I really liked here. The more time I spend in the DeFi space, the more I think DeFi will end up becoming a liquidity black hole that sucks in all idle assets sitting around doing nothing. There are many ways to farm market neutral yield if you don't want to take on the market risk of holding Bitcoin and Ethereum. This is the key point here, guys. If you're holding assets like Bitcoin or Ethereum, that's great, right? It's fantastic. And ETH is going to be having staking soon. But in the case of Bitcoin, in the case of other assets like Litecoin, okay, all these different crypto assets, they're great. The problem is that they aren't providing yield. And this is a big argument that a lot of people bring up about crypto assets with the volatility. How can you negate some of that in the long term? Well, one of the ways you can do it is by earning some form of yield. And you can do that through lending pools in the cryptocurrency space, in the case with ETH and ERC20 tokens. Now, as we start to see things like RenVM come to the forefront that are going to allow for other cryptocurrencies to be traded and utilized like you can ETH and other ERC20 tokens in the DeFi ecosystem, this is going to open up and unlock a ton of yield potential for Bitcoin and other digital assets like we've already seen through players like Celsius Network that allow you to earn anywhere from 3 to 4% on your Bitcoin. Right? So I think we're going to see expansions of this not only in C Phi but also in DeFi, and it's going to further expand out a competitive market across the board that's going to call for some serious competition in regards to providing yield to everyday people who are holding these assets. And honestly, the ETH transaction fee, the median transaction fee right now is a signal that this is going on right now. The average transaction fee right now, or the median, right, not the average, the median, is sitting at 33 cents, pushing towards 34 cents. I mean, this is incredible. This is the highest level we've seen since back here when we had a spike back in the summer of 2018, basically 2 years ago. So really, really fascinating stuff, right? And this proves this is a general uptrend. This isn't some random spike where, a certain party is doing crazy amounts of transactions. And it doesn't really have to do with price here. It has a lot to do with what's going on in the DeFi ecosystem and people using transactions. I can tell you all, we've been testing out things on our application, and we're part of this movement in this case that's driving up these transaction fees. So as much as we need to use the network, we're begging for scaling solutions in the Ethereum network. That's definitely something I'm looking forward to. Now, speaking about DeFi and C Phi, I know I've mentioned it before, but I just want to share it with you guys. I'm going to be speaking at BlockDown 2020. My good friend Cole Peterson wrote a good article here talking about the DeFi versus C Phi argument between Alex Majenski and Rune from MakerDAO. So I recommend you guys check out the event here. I'm going to be speaking there as well, but I'm also going to be moderating a roundtable discussion, but also be attending the event and chatting with people who attend. So if you guys can make it, I'd love to see you there. But all in all, that's it for today's video, guys. If you liked the video, drop a like. If you're interested in the conference, check out the link down below in the description. And also, if you want to keep in tune with my startup, if I interested you from talking throughout this video about it, it's going to be coming out on June 15th. So make sure to fill out the email box down below in the link for bankingforthe21stcentury.com. And there, you'll be able to get notified when the startup drops. We already got around 3,200 people registered. So I'm really excited to let you guys know what we've got planned in store here over the next coming days. That all being realized, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.